let's start with the economic reports that we saw this week. We had a CPI report, a PPI report, and a retail sales report, and none of them were really what we wanted.
No, they weren't. Yeah, so CPI, the Consumer Price Index, that's one of the ways that we measure inflation. That was hotter than expected. But, there could be lots of seasonal issues in there. It was for the month of January. Food and energy prices really drove that higher and hotter than expected. The Producer Price Index, that is one of those indicators that we like to occasionally look at. It doesn't oftentimes take the starring role just because it's somewhat nuanced and lagging. It comes out after the Consumer Price Index does. That was hotter than expected. Then retail sales for the month of January, that was weaker than expected. It was incredible, actually, that you could see the effects of the LA wildfires and the unseasonably cold weather that we had for the month of January for the rest of the country, because the automobile sales were down nearly 4%. Sporting goods sales were down nearly 4% in that 1 month.
And so you talk about hotter than expected really means that inflation was higher than what we wanted, and retail sales were slower because people weren't spending. Why is that important? Because obviously we wanted inflation to come down and the economy to keep cranking along. And so we did have this disruption that happened over the last 30 days. But as we look forward, what really went into that? Of course, weather did play a big part of that. But the other thing that we did see is eggs prices, again, through the roof. So obviously don't put all your eggs in one basket because it would be in a pretty expensive basket.
Yeah, my wife really appreciated that. For Valentine's Day, I got her a dozen eggs. I'm like, do you know the street value of those eggs? Nothing quite says I love you like eggs. But, also Chair Powell, he testified before Congress. So he did a semi-annual report before Congress and said that the Fed wasn't going to be in a rush to continue cutting rates. And the data that came out this week, I think, really underscores why they can be on pause. But yet when we look at how the market as a whole did, S&P 500 for the entire week was up nearly 1.5%. The NASDAQ was up more than 2%. And so even though we had this hotter than expected inflation, weaker than expected retail sales, it was really the earnings reports that were coming in and helping to push stocks higher.
And that really is important because sticking with the eggs theme, right? Don't count your chickens until they're hatched, right? Just a whole lot of eggs hanging around. The reason why is because even with this bad economic reports, we did see the market move forward because of really good earnings and a number of good earnings reports. And of course, McDonald's and Burger King were at the top of that list.
That's right. I really like doing a compare and contrast with McDonald's. We know that their earnings were affected in the fourth quarter from that E. coli outbreak. And so they did see sales decline, but it does seem like maybe they're going to be rebounding from that. Burger King, they are owned by Restaurant Brands International. So they also own Tim Hortons, Popeyes, and their numbers were actually better than expected. So consumers are being picky, but they are coming out of hibernation, it kind of seems like. As long as companies are willing to offer value for the price, consumers are still willing to spend.
And you looked at last week's Super Bowl and all of the beer ads that came out, but you see that Molson Coors still did pretty well, even though that we see the Gen Zers not drinking as much, probably because they're throwing down the gummies like they're chiclets. But we did see that Molson Coors still did pretty well, even in this environment.
That's right. And part of it is the diversified product offering. They were talking about how they are expecting to see better growth in some of the non-alcoholic mixers. So that's the whole mocktail thing. So even though Gen Z is cutting back on drinking and maybe using some of those gummies instead, they're also seeming to opt for what can be kind of expensive mocktails instead. Now, I mean, for myself, I'd rather just get a ginger ale or something like that instead of paying more than double that at a bar to get a mocktail. But it's with that. And then also this whole hard seltzer thing. That's also become very popular. And so some of these bigger companies, whether it's Molson Coors, Coca-Cola, or Pepsi, it's interesting how with their diverse product offering, when demand in one area is falling, or maybe they're not finding they can push price there, they're able to do it in other areas instead.
Places that this does go well, of course, is in Las Vegas. And we did see the MGM and Marriott forecast higher growth.
That's right. So MGM, they have you been to Las Vegas to the
Not this last week, no.
Oh, no, yes. But at some point, I remember going to the MGM Grand, that very large property that they have there. But they have a number of other properties, and they said that convention traffic is back, that they actually had record bookings in the month of December. And their calendar for 2025 is already looking pretty full. So business
Sounds
travel.
like a road trip, Dr. Brian.
It does. I mean, I don't mind. I don't gamble much, but I do like going there and just looking at just those huge buildings. And I love the smell of commerce, first thing in the morning. I think that's one of those movies from when I was growing up.
You should go down. You should go to downtown Manhattan. You'd get a different smell.
That is true.